My name is Dalein. I'm an associate principal in the Metier Capital Growth Fund. LMCGF is a late-stage private equity fund focusing on mid-cap growth capital opportunities. It's a R3.5 billion fund, and we are fully deployed with 8 investments. We recently exited Surgical Innovations, which is our first full realization in the fund. We deployed approximately just less than 60 million rand in Surgical Innovations. It was our last investment in the fund, made in August 2008. Maybe a little bit about Surgical Innovations. It is in the healthcare space. It's a medical device distributor focusing on the equipment and consumable needs of surgeons specializing in the general surgery, gynecology, radiology areas. We invested, like I said, around 60 million rand, and we exited SAVCA-EY in January 2014, which is a little bit over 5 years. On exit, we achieved on the equity portion a 3.5 times return on or times money and about a 30% IRR. On a gross basis, we did 2.8 times money and 28% IRR. We exited to a trade buyer, a listed trade buyer called Ascendis Health. They had recently listed on the Johannesburg Stock Exchange and saw Surgical Innovations as an attractive platform from which they could grow the general devices business, and engaged with us on a potential exit. I think in this case, Surgical would have been too small for a listing on its own, so I don't think an IPO would have been possible. I think the likely exit options for Surgical always were intended as a trade buyer, as a priority, potentially a management buyout, or else to another financial investor. So I think in order to maximize our exit, a trade buyer would have been preferred, and we managed to attract Ascendis. That was opportunistic. But it was the right timing. We weren't opposed to entertaining exit options, but having said that, we weren't actively selling the business and engaging with financial buyers or other. So when the approach came from Ascendis, we were always in a position to be able to engage. The business was tidy, neat. It was in a position that we could put our best foot forward and show some of the growth prospects and what we had achieved. So it was an easy process, but it wasn't a planned process. Honestly, I'm not sure I would change anything. It was a very smooth process. It was very amicable. I think they got value. I think we got value. It was one of those win-win scenarios. We're sad to go. Obviously, we built up a relationship with the CEO over a period of time. We didn't have advisors really involved, and it was just a principal-to-principal discussion on a relatively short time frame. It wasn't dragged out, and we managed to execute it, I guess, in two months, with the ComCom being the last condition outstanding, which took us into mid-January. But absolutely nothing, I think, that went wrong or that we would have really have changed. I think it is a price that leaves enough value for Ascendis on the table, and the future prospects. I think this investment will do well for them. Having said that, it met our criteria as well. We achieved close to our 30% IRR, 3.5 times money. On the process side, I think it was no unnecessary work. I think the engagement and the negotiations were to the point, and both parties focused on reaching the right conclusion in a win-win type scenario. So no competitive auction creating that tension. Just a principal-to-principal discussion that you could quickly get to the point. You could negotiate with the counterparty that could make a decision there and then. And I think that facilitated a quick process. And I think that the benefits of that are probably being felt in the business. The business wasn't disrupted. There weren't onerous information requests. There weren't interviews and due diligence. It was very much to the point. We know what we're looking for. If we can meet those criteria, the deal's done. When we invested, it was clear to management that at some point we would need to exit, and we were quite clear that these exits can happen. They can happen quicker, they can take longer, but to be ready at any point in time with simple things like governance, board packs, good minutes, management accounts up to date and robust, product line analysis, etc. Having all those types of pieces of information that if somebody comes along and looks at it, that you can quickly explain the business to them, show them how it's performed year on year, month on month, etc., and they can quickly form a value view. I think that that we helped drive, and that was in place, firmly in place. So when the senders looked, we could just deliver them a pack, and they could quickly get up to speed and form a value view. And then I think, other than that, more just on a mindset or psychological basis, it was from the outset, the expectation was set that we would be exiting. So it wasn't a surprise to management, who were actually the majority shareholders, that when this opportunity arose, we need to look at it, or we should be looking at it, and looking at it together. So when Ascendus did come, everyone was on the same page saying, we should look at it. If it works for us, we should do it. If it doesn't work, well, then we'll just continue with our existing plan. So we always had a backup plan, and we would have been very happy to hold on to the asset for another 3 years and run our plans. But as it turns out, there was common ground, and we could go down the exit process. I don't think our fund in particular has missed an exit opportunity. I think we've still been running our plans from when we made the investment, and so we weren't ready in terms of the performance and where we want it to be in order to maximize an exit. Obviously, there are two factors going on. There's the return side, which just if you invest 100 and you get 130 the next year, you've done 30% IRR, but your times money is very low. But on the other hand, you don't want to hold it for 100 years and do 3 times money. So it's always that positive conflict or that one has to work. And I think on our fund, we may have been able to get the returns, but we weren't happy with the times money result, and we needed to hold longer. And we had insights and convictions that we could achieve more. So I think we'll start to see, I think the timing is right for a number of our assets, and we'll probably see a lot more exits in the next 1 to 3 years on our portfolio. But no, I don't think we've missed anything in particular. We've had some unsolicited bids on some of our assets, but nothing that's made it a no-brainer, and nothing that's taken us into the surgical process where we just say, yes, that makes sense. It's a natural time for us to exit.